Joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel, CoinDesk Managing Editor of Technology, CHRISTIE Harkin, in the UK, and Managing Editor of Markets, Brad Cowan in Austin. Hello there, Brad and CHRISTIE.
Hi, Christine.
Yeah, good to see you. Happy Friday. Although I'm very anxious to see what's going on in the news. It seems very bad everywhere you look. But among silver linings, we're seeing Bitcoin being used to accept crypto donations for humanitarian aids. This is from Ukraine. So far, Ukraine, their official Twitter account, has released several Bitcoin addresses, or one Bitcoin address and other cryptocurrency addresses. You can send them cryptocurrencies so that they can amass some humanitarian aid and so on and so forth. $10 million worth of BTC has been received, $17 million in Ether, over $50 million in cryptocurrencies altogether. CHRISTIE, these fundraising efforts are pretty incredible. Airdrops have also been suggested. They've been canceled. Possibly some NFTs may be sent for those who are donating. But it's also raised concern among U.S. lawmakers as a possible means of sanctions invasions on the Russian side. I wonder if you could weigh in on this.
Yeah, well, actually, I think some of those numbers have gone up in terms of donations. What I'm seeing is 17.2 million in Bitcoin alone, with a total of something like 72 million, or 54 million altogether in all different cryptos. So that's quite a lot. There have been, so there's a couple of things that people have been talking about in terms of whether or not we're going to see Russia evading sanctions. And I think the best thing I've seen written on it so far, there's an excellent article today in CoinDesk from Michael Casey, CoinDesk Chief Content Officer. And he's really laid out a lot of the reasons why, first of all, Bitcoin is still a really awesome, has an awesome value proposition for people who are trying to use finances when they are being cut off as the little guy. But also why it's really important not to overestimate the capacity for Bitcoin to actually evade sanctions for the large state that needs to get funds. And one of the reasons why is even like the Treasury Department Secretary has noted that, or the Treasury Department has noted that there just isn't the liquidity. The order books are way too thin, and we can't possibly fund Russia based on what's flowing in and out of crypto exchanges. It's just not there at scale. So that is not going to be have a meaningful impact on Russia's ability to finance itself and finance its efforts in Ukraine. On the other hand, the money that is coming in from Bitcoin donations and other cryptocurrencies to Ukraine is having a major impact because it's getting there now, and it's getting there quickly. And it's not waiting for Congress to hem and haw, the United States Congress to hem and haw. It's not waiting for other governments to decide whether or not they will send and at what point they will send relief. So this is money that's happening right now and is getting there quickly.
Yep. I'll just add to that Chainalysis, we spoke to them earlier this week, and they have not seen evidence of Russia using crypto to evade sanctions. There have been no big transfers of BTC the size that would resemble a nation state transacting in Bitcoin. There's more evidence, as you mentioned, that smaller transactions are being made, which more closely represents ordinary Russian users. Also, crypto exchanges are being asked to ban Russian users. That was a huge existential debate for the crypto world this week as well. Many crypto exchanges, heads of crypto exchanges like CZ of Binance, like Jesse Powell of Kraken, came out saying that they will not unilaterally ban Russian users. Some mentioned that, if there were laws specifically requiring them to do so, they would abide by them. But just a call from basically Ukraine asking crypto exchanges to ban Russia's users in Russia is not something that they would adhere to lightly. There has also been, in terms of looking at the markets, a conversation about crypto being used as a safe haven, or is it just another risk asset, much like tech stocks, Brad? I wonder if you could weigh in on the market action.
Well, there was a brief, moment at the beginning of this week when we had that big 14% pump on Monday. And, it seemed like Bitcoin just shot off the launch pad and went up kind of into the mid 40s all of a sudden, and kind of changed the picture a little bit. And it was not coordinated with stocks. And that was something that was kind of a change from the recent pattern where Bitcoin kind of has been trading, like you say, as a risk asset in sync with stocks. But it's kind of reverted over the rest of this week. We're down today, and it's, stocks are down today. We have oil prices, high oil prices. People are kind of freaked out about that and what that might mean for the economy. And, or maybe, again, it sort of leaves the Fed in this between a rock and a hard place where their choices are between like tamping down inflation and putting us into a recession, or it's just the same. That is their choice. But we had this jobs report this morning, that was much stronger than expected. So maybe people are thinking on the margin that pushes the Fed to be a little more hawkish. But so, yeah, there was some speculation about Bitcoin decoupling from stocks, but it may prove in hindsight just to be a one-day thing.
Mm-hmm. We had a big hearing this week with Fed Chair Jerome Powell. He was at the Senate Banking Committee answering tough questions from lawmakers. Among them was that, whether or not crypto should have clearer, stronger regulations to make sure that in the event Russia thinks about evading sanctions with crypto, that doesn't happen. Inflation, interest rates was also a talking point, of course, but it seemed that the war in Russia and Ukraine will not break the wheels and of the Fed in terms of heading toward an interest rate hike, right?
Yeah, maybe at the margin, it has softened the Fed's approach just a tiny bit. In other words, a lot of people prior to this Russia's invasion of Ukraine, a lot of people in traditional markets were expecting the Fed to do a 0.5 percentage point, 50 basis point hike in March at this month's meeting, just in 2 weeks. But people with this economic cloud that's sort of over the global economy as a result of the war, maybe it takes off some of the steam from the economy, from the reopening. And so it takes a little pressure off the Fed to do a much more aggressive hike. And that's been kind of priced out of the markets over the past week or so. But yeah, for sure. Powell came out explicitly in his testimony on Wednesday and said, we're going to hike 25 basis points. Like your Fed chair doesn't get any more explicit than that.
Mm-hmm. All right. So that's coming along this month. Christy, also, you are in the United Kingdom, I understand, at the Advancing Bitcoin Conference. Oh, you're in London. So tell me what's going on. It's all devs, all tech, all the time. What's the latest?
Yes, indeed. It's been two wonderful days of just heads down tech talk, talking about what is going to be happening with Bitcoin in the future. Mostly, I think the theme really has been talking about the Lightning Network and advancing what's going on the Lightning Network, not just in terms of the UI, but also in terms of privacy. The other takeaway that I got from this conference was really a lot about privacy. We talked about join markets and we talked about coin joins and multi-sig and how Taproot is going to be implemented and where we are and where we're not yet, as I keep saying. And this is a topic that's come up a lot, especially in light of recent protests, in light of Ukraine, and where are we in terms of being able to help people preserve anonymity, preserve privacy, but also to keep things moving. And the developers that come together on these conferences are exchanging ideas and telling each other what they're working on and asking, for help with it. And it's a really great meeting of the minds when you come to a conference like this. It's small, it's fairly intimate, and it's highly, highly productive. And it also underscores the way that Bitcoin works, where you have people who are passionate about it coming together and making sure not just that there are advances on Bitcoin, but they're the best solutions, the ones that aren't going to break the protocol. There's nothing in here at any point that encourages go fast and break things. It's move slowly, make sure nothing breaks, and make sure that everything we do today is going to have a positive ripple effect for the protocol in the future. And that's really been the takeaway.
I also saw, CHRISTIE, that CoinDesk has an article out on Join Market. They're about to make Bitcoin privacy more user-friendly. What's that all about?
Well, Join, and it's kind of wonderful in a way. This article came out last Friday, and I had a chance to actually speak with Adam Gibson, who is one of the developers on Join Market, and he gave a presentation. So Join Market's an open source Bitcoin privacy project. It's been around since 2015, and it enables coin joins, mixing your coins with other people's coins, and then the outputs are all mixed, are all sort of scattered, and you don't know exactly where those coins came from, which is a really good privacy tool. Now, the thing with Join Markets and most mixer protocols is that they're really hard to use. If you don't know what you're doing, it's really tough. And they've come out with, it's still an alpha, it's still, you have to be careful using it, but there is a new user interface that is hopefully going to make it a lot easier eventually down the road for people to be able to actually take privacy into their own hands and not have to rely on, being a super coder to make it happen. So that's really cool. And Adam got to talk about what was in the cards for Join Market and how, encouraging people to use the test net and give back and give him feedback on how to make it better for everybody.